Next guest says his inaction threatens a Santa rally sparked by the Brexit breakthrough. Joining us is Trading Point CEO Peter McGuire. So, Peter, this standoff, how do you see it getting resolved? Does it get resolved? And I guess more critically, how do you trade this?
Well, good morning, Paul. Yeah, I think first off, I think you've got to trade it. Softness further continuing for that US dollar. It's now at about that 90.2 for that US dollar index. So I feel as though we'll be back in the 89s, possibly by this time next week, if not sooner. There's the first part. And the second part, yes, I think President Trump will stump up and do what he has to do to get everyone to that $2,000 mark.
What kind of precedent does this set from the president, though? Because it appears you'd have to think that he had some say in these negotiations leading up to it. Given that, do you anticipate some more chaos in the final days leading up to his last day in office on January 20?
Yes, Paul, I do. I think the volatility will continue, certainly for the next 3 weeks, the uncertainty. There's just so many moving parts. We've got Boris and the boys over the line there with Brexit, but the big one is the inauguration and what's happening between now and then. So I think the volatility will remain. I wouldn't be surprised the Dow to continue to hit records, you know, every couple of days, and S&P will be bid up. So US dollar off, equities up, and the stimulus full green light to make it happen.
Well, you know, Peter, just to ask you a more specific question on Brexit, is there any doubt in your mind that this deal, even if it's imperfect, even if both sides had to give up something, et cetera, any doubt that the House of Commons is going to pass it this week?
I think it's a toss of the coin, Kathleen, at the moment. I would be erring on the side they would, but who knows? You know, they've got their own certain heartache there at the moment with that out-of-control COVID, and that, I think, is getting the number one calling. Let's just see what happens. You know, that uncertainty remains, but I'm pretty sure that something will happen.
So as you get ready, we're just days away from 2021, what kind of, when it comes to equities, and it comes to, say, U.S. stocks vis-a-vis the rest of the world, where are you putting your money?
I'd have to say that US stocks are still looking fairly favourable. There's no money in bonds. You can't make a dollar there. So I think you've just got to look at that US equity calling. It's a rally that just keeps on getting stronger as each month wears on. It's been the greatest month, or pardon me, it's been the greatest year for traders, Kathleen, and I feel as though that will continue over the next month or two. I'm not sure how it looks in March with a new president and certain other conditions coming into play. But at the moment, I think it's just onward and upward for the Dow.
Yeah, some of these valuations are looking pretty rich now, though, particularly big tech, which almost acted like a haven. Do you see any more room to move upwards there, or where do you see decent opportunities in terms of good value?
Well, Paul, you know that, the PEs, they're just everything stretched, but with money the way it is, it's so cheap that that's the realisation as far as those valuations. There's the first part. The second part, yeah, look, what's full value? If you talk to the young people and you have a chat to them about technology and what their frontier looks like, 20 years out, they all think it's relatively cheap. So I've got to be on that band and probably bid up at the moment. There's more upside and possibly, the next couple of months still have got momentum to make a dollar out of equities.
Yeah, you did mention there's no money in treasuries at the moment. Can you see a scenario where the 10-year cracks 1% sometime in 2021?
Maybe, but I think there's just, let's see who's running the Fed. Let's see what the mood is. Let's see how bad COVID is globally, Paul. New strains being, coming out across England and the impact that's going to have. I don't know whether it's going to be 21 is going to be our saviour year. I think that there's so much uncertainty that it could be a longer, protracted, wear down as far break that 1% for the 10-year. But I'm never going to say never. There's too many things that change in this environment at the moment.
So, Peter, I'm curious what you make of $2, US dollar and the Aussie dollar. Both have been in the spotlight for very different reasons as the year comes to a close.
Sure. Well, we're at 76, so I think that that's possibly got the potential to hit that 80 handle sometime in 21. I wouldn't be surprised. I just think that the momentum to the upside, the China demand picture, as long as they don't play hardball, too much more hardball as far as some of our commodities, Kathleen, that's really the great uncertainty. And if we can contain COVID, we've had a very dream run at the moment. It's had a breakout in Sydney in the last week or so. If we can contain that, then I think 21 is going to be a good year for the Aussie and a good year for our economy. As far as the US dollar, I think the further softness, 89, 88 handle for that US dollar index.
You know, the moves in oil as the year comes to a close, Peter, caught a lot of investors' eyes as well. What do you see there for crude?
I still look, Kathleen, 50 to 55. I can't see. I think all of those, the shale story will get re-engaged as we hit 55. I'm not sure whether President-elect Biden or is going to be a different viewpoint as far as energy compared to the Trump agenda. So I think that that's got to come into play. But I still don't think you're going to get back above 60. I think you've got to have really strong potential as far as growth for oil to be back above 60. And I really think that that's going to be the handbrake number over the next matter of months. Again, COVID, demand destruction, and all of those inputs.
So much seems to depend on COVID, vaccines, and more. Well, thank you so very much. Trading Point CEO Peter McGuire.